Today, we're going to tackle some of the most common myths surrounding passive real estate investing. And at the end, I'll share what you should really expect from passive investing. I'm James Furlo, providing strategies and tools to help real estate investors maximize their long-term cash flow while minimizing headaches. Thanks for watching. Myth number 1, passive investing requires no effort. In reality, while it is significantly less hands-on than active investing, it does still require some effort on your part. And that is especially true at the beginning, because you need to select the right investment, do your due diligence, and then afterwards kind of follow up on the portfolio to make sure that it's doing well. I think of it a lot like investing in a single stock. You want to do the research, but you're not the one who's running the company. Myth number 2, you need to be wealthy to be a passive real estate investor. While there are a lot of investment opportunities that do actually require you to be wealthy, either because they have a high minimum of say like $100,000, or they require you to be an accredited investor, there are still a whole lot of other options that don't, either by having a lower minimum or by not being accredited. So there are a lot of opportunities, even if you're not a wealthy individual. Myth number 3, passive investments are always long-term. In reality, while there are a lot of investments that do require long timelines, for example, a syndication is often 5 to 7 years, which is a long time, there are a whole bunch of other options, like say funding a flipper, where they're gonna do the rehab in less than 6 months. And so those are much shorter. So you don't always have to be committed for many years to be a passive investor. Myth number 4, passive investments are risk-free. In reality, all investments carry some risk. And even as a limited partner, where some of that downside is significantly limited, you still have the risk of market fluctuations and a bad property manager and economic downturns. And so it's really important to understand what it is that you're getting into. In fact, before you invest in a syndication, you will receive a very long document called a private placement memorandum, or PPM for short, that spells out all of the risks related to the investment. So the sponsor should be really upfront and straightforward about what those risks are. And myth number 5, passive investing offers no control. In reality, while you don't have a say in day-to-day operations, you do have a say through voting rights of major decisions, such as selling the property or doing some really big renovations. And honestly, it doesn't help to have a great relationship with your sponsor and talk regularly so that you can informally give input and know what's coming beforehand. So those are the top 5 myths of real estate investing. So what should you really expect when you passively invest in a property? For starters, even though there is risk, you should expect to receive regular cash flow distributions along with what should be a fairly sizable check once the property is sold. Another thing that I like is that you have just less volatility. Yeah, the stock market might swing up and down, but rent payments tend to be pretty consistent and predictable. And that is especially true the larger the property gets. And honestly, there's some really cool tax benefits thanks to depreciation, doing a cost segregation, and then simply having lower taxes on longer term gains. And then finally, this doesn't necessarily hit the spreadsheet, but you're helping to provide some great safe places for people to call home. And yes, you do want to put in some work to be as informed about the deal as you can. And so if you ever have any questions, get on the phone with your sponsor and ask them. They will be more than willing to walk you through the deal and what they're thinking. So there you have it. If you found this video helpful, please like it. And if you'd like to get more tools and strategies to maximize your long-term cash flow while minimizing headaches, please subscribe. Thanks for watching.